Okay. So in today's session, we'll go through few points which we have to understand to create the transaction in the application. It can be any application. We discussed about P2P and O2C cycles. What are the applications we have seen within the P2P or O2C, or take any other application of Oracle Fusion application. If you want to create the transaction in any application, what basic information we required, we'll go and see that. Say you performed one purchase activity or sales activity. You purchased something, or you did some sales activity, or you spent something, or take any business transaction which we do as a part of day-to-day activities. If you want to record that sort of information in the system, ideally you have to capture the date. You are doing the transaction on which date you have to capture, and what activity you are doing we have to record in the system. Okay, which activity you are doing, and you have to provide the amount and so on. So date, what are the activity you are doing, that activity you are doing with how much amount, say 10,000. So the 10,000 can be any currency. Okay, it can be any currency. Just I am giving amount, it is 10,000. That could be rupees or dollars or anything else. So if you want to capture the date, when you talk about date, again that date should belongs to so and so period. So if you want to capture the date in the system, we have to create calendar in the system. We have to create the calendar. We have to create the calendar in the system. How to create the calendar in the system? The same calendar you can call as accounting calendar as per system. Why we are calling the calendar as accounting calendar? With the help of calendar, you can record the transaction and you can capture the date. With the date only, you can create the accounting also. Okay, for each transaction, by using the same date what we use from the calendar, you can create the accounting also. That is the reason we can call it as accounting calendar. So how to create the accounting calendar or calendar to record the transactions in the system? To create the accounting calendar, first we should understand what is the financial year for a specific country. If you take example of US, say you are doing the implementation for one of the US client. Now you have to create the calendar in the system as per US financial year. Now, what is the financial year for US? If you take current financial year, the US financial year starts with the Jan, ends with the December. That means 1st Jan 2020 ends with 31st. Okay, say 31st December 2020. So this is a financial year for USA. And if you are going to do the implementation for any one of the Indian client, as per India financial year, you have to create the calendar in the system. So what is the financial year for India? 1st April, 1 second, 1st April 2020. Okay. It ends with 31st March 2021. This is the financial year for India. So for which country we are going to do the implementation, as per the country financial year, we have to create the calendar. So within the calendar, what is the period frequency you want to follow? Yes, the financial year starts from Jan to December in case of US. And you talk about India, it starts in April, ends in the March. This is the India financial year. Accordingly, you can create the calendar. If you are creating the calendar for US client, create from Jan to December. In case of India client, create from April to March of next year. Okay. Now, what periods you want to use within the calendar? Period type. That means period frequency. Within this financial year, how you are going to manage your books, how you are going to have a control on the transaction process which you record in your system. So you can have a period type as ideally monthly, okay, or weekly or daily or quarterly, hourly, any period type you can opt. But as per business, when you do the implementation, ideally we use the period type as a monthly. We create monthly period type. Accordingly, they'll maintain all the transaction. They close the books every month as per system. Reality, every year they close the books. That also we can perform. But ideally, we go with the period type as a monthly. If you take example of any financial organization, say if you are going to implement Oracle Fusion application for any bank, we use the period type as a daily. The banks has a system where they close the books every day. But in case of normal businesses, we use the period type as a monthly. So that we call as period type. Period type could be anything monthly or weekly or daily, quarterly, hourly, yearly. But when you create accounting calendar, so very generic requirement is monthly period type. By using the monthly period type, you can create the accounting calendar in the system, or simply call it as calendar. So how to create the calendar, that we'll see in the system, but just to understand the point, to capture the date, we require the calendar in the system. When you are creating the calendar, the very first point we have to consider, we are going to do the implementation for which country client. Accordingly, we have to create the calendar. We have to follow that country financial year. When you are creating the calendar, it's very important we have to specify we are going to follow which period type. If you take period type as monthly, so how many periods we can have in the accounting calendar? 12 periods. But reality, what we do is, even we have a 12 periods in case of monthly, we can create more than 12 periods in the system. Say for example, your client wants to do certain adjustments end of the year. Instead of doing the adjustments in the last year, if you take India financial year, instead of doing the year closing, when they are closing the year, instead of recording the adjustments in the March month, they may plan to record all the adjustments in the separate period. To track all the adjustments in the end of the year in the separate period, we can provision the additional periods in the accounting calendar. That means we can have 13 periods also if required. So 12 are actual periods. The one additional period is additional period. Okay. So if it 13, 12 are actual periods. The additional period. One is additional. Okay. So one is additional period. So you can have one or more than one also. If period type is monthly, ideally 12 periods. If you want to maintain two additional periods, yes, you can maintain. If you want to maintain three also, you can maintain. Ideally, one would be enough. One would be enough. This additional period, whatever we create in the accounting calendar, that we call as adjusting period. What is the purpose of adjusting period? The end of the year, when we are closing the periods, if any adjustment entries need to be recorded, those you can maintain separately in the additional period called as adjustment period. So this is how we have to create the calendar. When you create Jan, Feb, March and all these 12 periods, we know what is the date range we have to take. In case of Jan, 1st Jan to 31st Jan of the same year. So that's how we can take the date range. If you are going to create one additional period called as adjusting period, what date range you have to take? The date range we use from the last period of the calendar. From the last period, you can take the entire date range for the additional period, or from last period, you can take 1 week time or 1 day time also. So how you require accordingly, you can take the date range into adjusting period, which is additional period for adjustment entries purpose. Okay, this is what we have to understand about accounting calendar. You no need to create this accounting calendar by entering all the periods. Okay, you no need to go and enter all the Jan, Feb, March and all. Just you have to tell to the system, so on which date your financial year starts. If you inform to the system, and if you just tell to the system how many additional periods you required, automatically system can create the calendar. So that's how we have a functionality in the system. So this is what we have to understand when you talk about calendar. When you record any business transaction, we have to capture the date and the activity information and amount. To capture the date, we need calendar. The same we are calling as accounting calendar. Accounting calendar we have to create based on the country financial year. Any questions on this point, please? Any questions here, please?
We are having only one type of calendar. Do we have any other type of calendar?
For what purpose?
No, you're telling this is a financial calendar, you're telling, right?
Accounting calendar. Okay, to record the any business transactions, we have to capture the date, and the date is belongs to which period. For that, we maintain the accounting calendar in the system. We have some other calendars also, but those are not mandatory, compulsory. If you are going to implement that relevant scenario, we have to create those. We'll see as per the concept, we'll see, but primarily this is the mandatory one. It's a compulsory you have to create. Without this, you cannot create the transactions. Any questions, please?
Two accounting periods?
Sorry?
Can we maintain two accounting periods?
Two accounting periods, not two type of accounting periods, you mean, right?
Yeah, exactly. Now, example, like a local company is from April to March, but the parent company in USA from Jan to December. So can we maintain the accounts like that?
Yeah.
In the
when you talk about different countries, here you are talking about US and other country. So in that case, you can maintain two separate calendars with a different period types to use for different countries. For one country, only one period type you can use when you create the ledger for that country. In one calendar, you can have only one period type. Your parent and subsidiaries are following the different period types. Yes, you can create accordingly two separate calendars. For your parent, you can use that one period type calendar. For subsidiary, you can use different period type calendar. That's how we have to manage. Within one, we don't include two period types. Not possible also. Any other questions, please? Okay, so that's all about date part we have to understand. Now let's talk about the amount. Okay, let's talk about amount. When you create the transaction, we have to include the amount in each and every transaction. So if you are going to enter, say 5,000. So we cannot understand what this 5,000 all about. We have to address this amount is in which currency. Okay, maybe it is in INR. If not INR, USD. Or else I'll say if I enter 5,000, that is INR. Again, I may enter 1,000. This could be USD. Okay, if I enter 500, that may be AED. So what are the transactions we enter? Within that, the amounts what we are providing, that we have to specify with the currency. We have to specify with the currency. So the amounts we have to specify with the currency. Say you are doing the implementation for one of the US client. If you are doing the implementation for one of the US client, in that case, the USD currency for US client, okay, for US client or US company, if you are doing the implementation, what is the local currency in the US? USD. So when you do the implementation for any company, for which country you are doing that implementation, that country local currency is we call as functional currency. You are doing the implementation for one of the US client. So in the US, the country local currency is USD. So USD currency we call as functional currency. So client is running the business only in US. So USD currency we are calling as functional currency. Other than USD, all other currencies for US client company we treat as foreign currencies. So INR, okay, AED, SGD, GBP, all these currencies we call as foreign currencies. Or we call as foreign currencies. So when we talk about the currencies, basically we can classify into two types, that is functional currency and foreign currency. Functional currency means the country local currency where client is operating the business. Say for example, client is operating the business in these three countries. When client is operating the business in three countries, for US operations, for US business, USD is the functional currency. For India business, INR is the functional currency. For AED, for UAE, the AED will become functional currency, but for India, USD and AED will become foreign. For US, INR and AED will become foreign. For UAE country, INR and USD will become foreign currency. The country local currency we call as functional currency. All other currencies we call as foreign currencies. Any question here, please? This is how we have a classification. We have one more point we'll discuss, but whatever we discussed on these points, any questions, please? No question. Fine.
Can we maintain the accounts in two different currencies? Like example, local company.
Yes. Yes. The answer is yes. Answer is yes.
Yes, sir.
Yes.
Okay.
We'll be working on those concepts also. Okay, we'll see that.
Okay, thank you.
Yeah. Fine. Now I'm going to enter some value, 1000. What is this?
One question here.
Any question?
Yeah, Lakshman. The company is maintaining what you said. That is the thing. The company is maintaining the company in three countries.
Yeah, please go ahead with your question.
Yeah, and the companies maintain the business in three countries like India, Singapore, and USD. So then, in this situation, how the currency will be taken care?
We use what are the currencies or local currencies in those countries. That's all. See, the point here is, if any company is operating the business in any country, the country local currency we call as foreign currency. So what are the example you are talking about? So in that case, the country will have three local currencies respective to that country. For each country, if company is running the operations in US, okay, the USD is the local functional currency for US business. For Singapore business operations, SGD will become the local currency. For any other country, if they are running the business in that, for that country, that local currency is functional currency. For one country, other country currency is a foreign currency. What is your question?
Yeah, I got it. I got it.
Okay, fine. Any other questions? Seems to somebody unmuted earlier. Any questions here, please? Okay, no questions. So if you enter value as 1,000 here, what does it mean by 1,000? 1,000 is in which currency? So 1,000 may not be related to currency. It may not be dollars or rupees or dinars, okay, or pounds. So this amount, I'll say it's not related to currency. I'll say this amount is related to something else. It's not a currency. I'll say this 1,000 whatever I'm entering the system, those are kilograms. If not kilograms, could be square feet. If it is not square feet, it could be marks. It could be anything. It doesn't have any currency measurements. Rupees, dollars, dinars. Okay, these all are currency measurements. If you enter any value in the system that you may measure with the currency, if you are measuring with the currency, that you can call as based on which country we are recording the transaction, accordingly you can say this is a functional or foreign currency. But if you are going to enter some value which is not related to currency, like the measurements, like it could be kilograms, square feet, or marks, or liters, or score, it could be anything. These all are not currency related measurements. Okay, so this information we call as statistical information. Okay, statistical information. So here these all are the currencies. That means it's a monetary information. But this information is not monetary information. Dollars, rupees, dinars, all are monetary information, currency related. But this is not related to currency. That means this information is non-monetary information that we call as statistical information. So if you are going to record any information in the system other than currency measurements, that currency we treat as stat currency. From the statistical, they are taking the prefix as a stat, that we call as stat currency. Okay. Ideally, when you do some sort of calculations and all, we use this stat currency. For normal business transactions, we never use this stat currency. For some sort of calculations and allocations, we use this stat currency. This is what we have to understand. When we talk about currency classifications, we have functional currency, foreign currency, stat currency. The functional and foreign are real currencies, but stat is not reality as a currency, but as per system, we treat any non-monetary measurements or statistical information if you enter in the system, that we call as stat currency. Any questions here, please? Reality, that is not currency, but we treat it as a currency when you enter in the system. That's all. Fine. So this is what we have to understand. Now let's talk about activity.
What is the use of step currency for accounting purposes?
Sorry?
What is the use of step currency for the accounting purposes?
No. We don't record any business transaction. That is some sort of calculation purpose. I'll take example. Say you have finance department, HR department, and sales department. You are running these three departments and you are paying the rent as a $10,000. Okay, you have these three departments and you are paying 10,000 rent. The three departments you have in the same building, and each department occupied certain square feet. The finance department is occupied 2,000 square feet. And HR department is occupied 1,000 square feet. Sales department is occupied 3,000 square feet. So total how many square feet? 6,000 square feet. For 6,000 square feet, how much you are paying? 10,000 USD. Now you want to find out if 6,000 square feet are equal to 10,000 USD, how much for finance department? So you have to do the calculation. So in these scenarios, you can use the stat currency, not for accounting purpose. You will find out the value with this square feet information, and you can take that value into accounting. Directly this we don't use for accounting. Okay. Fine. If you want to find out the finance department, okay, how you have to find? So you have to take the 10,000 into 2,000 by 6,000, then you will get how much rent is applicable for finance department. Okay, for 6,000 square feet, if you are paying $10,000, then how much for 2,000 you can find out. For this sort of calculations purpose, you can use that values. Directly you can enter those values, but Oracle is naming that information as a stat currency, since that is a statistical information. Reality, that is not currency. For this sort of calculations, you can use that values which are related to statistical information, but we treat as a currency as a stat currency. That's all. Fine. Now let's look into activity. When you create any business transaction, you have to track the transaction is related to which activity. Fine. Say activity, or you can call it as description of the transaction. When you record any business transaction, we have to provide the date. The date we can provide with the help of calendar. We can create the calendar and you can capture. When you enter any value as a part of transaction, you can specify the values belongs to which currency. That currency can be any currency. It could be functional or foreign currency. But when you record the transaction along with the date and amount, we have to specify description. Okay, we have to specify the description. Means which activity we are doing. So when it comes to the activity, say you purchase laptop. Okay, say you purchase a laptop. When you purchase a laptop, you have to capture the date. On which date you are capturing. That laptop purchase you are doing in which currency you have to specify. When you talk about activity, activity is laptop purchase. Now, when it comes to company, the company point of view, you have to capture the detailed information. That means you may have a multiple companies, or you may have a multiple branches when you are running any business. Okay. Now you have to specify this laptop purchase has happened in which branch. Say you are running the business and you have a 10 branches. In which branch this laptop purchases took place, again for which department this purchases happened. This is how you have to capture. You have to capture the detailed information, which branch. If not branch, if you have multiple companies, you can say which company. Okay, which company is doing this activity. In that company, which department is doing this activity, which activity, laptop purchase. This is how we have to provide the detailed information when you create the transaction. Normally what companies will do is, when they record any transaction, what is the key information they have to capture in each and every transaction, those details they have to finalize. Generally what companies will do is, when they record any business transaction, the very basic information what they have to capture is the company. The transaction belongs to which company and it belongs to which activity. The activity they can capture with account. So along with this company and account, if they want to capture the department also, yes, they can capture the department. In every transaction they want to capture that is belongs to which department. say they can capture the department also and account. Okay, so very primarily we have to capture every transaction. The transaction belongs to which company and to which account. Account means the activity which we do. You may pay the salaries and you may purchase laptops, you may sell some furniture, or else you can spend some expense, everything, the activities which you are doing that you can capture as an account in the system. So in every transaction, what information you want to capture, that you have to finalize first. You have to take the decision. Once you take the decision accordingly, in every transaction, that relevant information you can capture. So you want to capture company, you want to capture department, you want to capture account. Okay, and in the same way, in your company, when you are recording the transactions, you may want to capture, you may deal with some services. So you want to specify in every transaction, what are the transactions you are recording, that is belongs to which service type. Okay, your company is dealing with some services in every transaction. Say if I'm going to record the company department account, which activity you are doing, so I can capture these three values only into every transaction. Along with that, that activity what we are doing, that falls under which type of service, which classification, that you may not take as account. Okay, you have to classify what type of service that is, or else if you are doing the activities which are related to some project, you spend some expense, that may be normal expense. You are doing some activities like projects in the organization, then you have to specify that information is belongs to that expense or whatever you are doing that is related to which project you have to specify. Okay, so this is how you have to capture. And again, when you are doing some transactions in the payables application, the transaction, the expense what you are incurring, whatever the transaction you are creating, you have to capture with the supplier. Who is the supplier? If you are creating the transaction, the receivables, you have to capture the information that transactions belongs to which customer. So this is how, when you are recording the transaction, in every transaction, which details we have to include, you have to finalize. If you include what details you required, accordingly you can generate the reports. But reality, what we do in the system is, if any information is specific to particular application, that you no need to take into description. If you take example of supplier is very specific to payables and to purchasing application. That information you no need to include in the transaction related description, that you can capture in the payables only. If you talk about customer is specific to order management and to receivables application, that you no need to take into each and every transaction. But the description part we have to decide, irrespective of application, what information we have to capture. It could be payables application or receivables application or general ledger application, or take any other application. Across all the applications, when you are going to create the transactions, what is a very basic information we have to provide as a part of transaction, that we have to decide. But very primary elements are company and account. Now what we have to do is, when we are going to record the transaction, you want to capture which company the transaction belongs to, which department, which account, which service type, and which project. These all the details you want to capture. So in that case, you want to maintain all these details in the system first. You have to finalize which details you want to capture in the system for each and every transaction, and you have to maintain all the values. Okay, how many companies we have? You have a company 1, or else you can write the name. Say company A, you have company B, company C. The same way you have a departments like finance department, HR department, sales department. The same way accounts like some salaries account, some laptop sales account. Okay, and the laptop purchases account, different accounts. There are many activities, every company involved, all the accounts we have to list out. In the same way, services. Okay, services may be some consulting services, some other services, etc. Okay, what are the services we just deliver to the customers, those we may have some classifications. Okay, say domestic services or local, foreign. So what are the different classifications you have for the services which you provide? If it falls under service based transaction, then you can include. In the same way, if you are dealing with the different projects in your company, okay, those all the projects names you can specify. Okay, the project 1, project 2, project 3. This is how you can just maintain all the details. If you maintain all these details, if you are going to record any transaction, so easily you can select all these details when you perform any transactions. Say you spend some expense. In that case, the transaction is belongs to which. If you spend some expense, you can address the transactions in a simplified manner. Say the transaction belongs to which company? Company A. Sorry, company A. And that is they belongs to which department? Say finance department. What you are doing? You are spending some expense. You can take expense account. That is the expense what you spent related to some local services which you are providing. And if it is related to some project, you can give the project number, or else if that expense is not related to so and so project, you can keep as 0. It's not related to any project. That's how you can specify. So this is how you can record the transaction. If you can maintain all the details when you create any business transaction, which information you want to include in each and every transaction, that you have to decide and you have to keep ready in the system, so that when you are recording the transaction, you can select that it belongs to which company, department, account, service type, project, or something else. I taken here examples as service type or project, or else you can take some other information like product, or you can take, you want to capture every transaction is happening in which location. This is how you can, as per your reporting requirements, you can take the decision. Okay, so when you go and generate the reports based on your business transaction, which information, based on which information you want to produce the reports for internal or external purposes, accordingly you have to take the decision and you have to keep this information ready in the system. When you are going to create all these classifications, like these many companies we have, these many departments we have, these many accounts we have, these many service types we have, these many type of projects we are handling, these are the different products we are dealing, these are the locations where we are operating the business. These all as per system we call as segments. These all we have to create in the system as a segments. Okay, these all we have to create in the system as a segments. All we have to create in the system as a segments. Under these titles only we are calling as segments. We call as segments. If you create the same in the system, we call as segments. For each title, we have a relevant information. These are the companies, these are the departments, these are the accounts. In the same way, for each and every title, we will maintain the relevant information. These details, as per system, we call as segment values. We call as segment values. So when you talk about these details, okay, when you talk about these details, whatever we are discussing, company, department, account, and all the details should belong to some organization, right? So there should be some organization name, say for example, XYZ organization. We are giving the title for this complete information. This information, these companies, departments, accounts, services, all are belongs to which organization or which enterprise. The title we have to give. Okay, the title we have to give. But what are the title we are giving here? That as per system, we call it as chart of accounts structure name. Okay, we call it as chart of accounts structure name. Right. So what are the information we are going to maintain in the system? This is how we use the naming convention. So which information you want to capture in the system, that information you have to create in the system as a segments. For each title, what are the information you want to maintain, that you have to maintain the system as a segment values. and this complete information is belongs to which organization. To address that, we have to give the name that as per system we call as chart of accounts, chart of account structure name. So to maintain all this information, see, this is some sort of hierarchy. We have a XYZ organization. Under XYZ organization, we can maintain all these details. Under these details, you can maintain the relevant information. That has to follow some hierarchy. That means in the system, to give this title, we have to create the chart of account structure name. Under chart of account structure name, to maintain all these values, information, titles, we have to create the segments. Now here, how many we have? Total we have a 6. We have to create the 6 segments. Under segments, we have to create the segment values, nothing but this information. Okay, so this is how we have to create in the system. When we talk about system, if you want to create the chart of account structure name in the system, we have one feature called as accounting key flex field. We have one feature called as accounting key flex field, or else this you can call as accounting flex field also. The reality with the actual name is accounting key flex field, but we can call it as accounting flex field also. Okay. First we'll discuss about all these points, then once we go to the system, it will become very easy for us to understand. Otherwise, directly if you try to create all these in the system, it would be a little bit difficult for you guys. So that is the reason I am trying to introduce how we have to deal with the system. So accounting key flex field. There is one feature called as accounting key flex field or accounting flex field in the system. Where we have that accounting key flex field? We have in the general ledger application. The general ledger application, GL, Oracle Fusion General Ledger. In the Oracle Fusion General Ledger application, short name is GL. The Oracle General Ledger application, we have accounting key flex field. By using the accounting key flex field, you can create the chart of account structure. In the accounting chart of account structure, okay, you can create the segments. Under segments, you can create the segment values. Okay, this is what we have to understand. So if you want to maintain how many companies, how many departments, how many accounts we have, directly you cannot enter in the system. Okay, what we have to do is in the general ledger application, by using the accounting key flex field feature, you can give the title for the entire information. Under that, you can create all these company, department, account as a separate segments. Under company, however, you maintain the company information. Under company segment, you have to maintain all the names that we call as segment values. So this is how we have to create in the system. Fine. This follows hierarchy. Okay. In GL, we have accounting key flex field. In accounting flex field, we can create the chart of account structure name. Within the chart of account structure name, you can give the segments and you can create the segment values. There are a few other points which you have to understand to relate to this. So when you are working on the system, I'll add those points. For now, this is what you have to understand. That means when you are creating the transaction, you have to decide how many segments are required to include in each and every transaction. With the help of that segments only, you can produce the reports. When you are creating the transaction, if you are going to use company, department and account, only these three as a segments, you can prepare the reports company wise, department wise or account base also you can generate the reports. But if you have a requirement of identifying the transaction belongs to which service type, for example, so you have to include service type also one of the segment within the chart of account structure, so that you can capture the service type in each and every transaction wherever it is applicable. Accordingly, you can generate the reports. Or else, what are the transactions you are recording? You want to specify the transaction related location. So if you include the location in every transaction, so that you can prepare the reports location based also for which transaction the location is applicable. So how you want to track each and every business transaction with which information you want to track and how you want to produce the reports. Accordingly, you have to finalize the segments whatever we require. Okay, if you want to keep description ready in the system for each and every transaction, we have to finalize how many segments required for the client. When you sit with the client, we will discuss with the client what key information you are capturing into each and every transaction. Okay, what key information is you are capturing into each and every transaction. They'll tell us, okay, basically we just capture company or say branch, so and so department, and so and so other information we captured. They'll tell us. Based on that, we have to understand. So whatever the information they are capturing across all the applications, the most of the transactions, that we have to take as a segments into this chart of account structure. The chart of account structure, those all key information we have to take into chart of accounts. If you notice here, the accounting key flex field. That means by using this key flex field, you can capture key information of company when they record the transaction. What does that mean by flex field? Within the general ledger application, this accounting flex field will give the flexibility to maintain all this information with a hierarchy. The title under that, these title under those title, this information. So it will give the flexibility. It's a flexible field to maintain the key information of the company, especially accounting information. These are all in details we can use for accounting purpose. So that is the reason. So we have a flex field which allows us to maintain the key information of the company for accounting purpose. So by using the accounting key flex field, we can create the chart of accounts. When you create the chart of accounts like this, so this information you can use for accounting. Ultimately, the chart of account we can use to capture the transaction related description and to create the accounting. Based on that accounting, you can prepare the reports also. So that is the reason that we call as accounting key flex field. By using the accounting key flex field, we can create the chart of account structure. Within the structure, you can have a segments and segment values so that when you are going to record the transaction, you can capture. So when you do the implementation for any client, how many segments we have to use to create the chart of account structure for any client? That completely depends on the client requirement. When you sit with the client, they'll tell us, okay, they may ask us, we need one segment called as supplier. Then we have to tell them. The supplier can be used in the purchasing and payables, that you don't need to include in the chart of accounts. In the chart of account, we have to use segment which can be used in the multiple applications. So supplier wise, you can prepare the reports within the payables or purchasing application. If you talk about customer, the customer also you don't need to take into chart of accounts. The customer can be used, managed in the receivables and order management application. That also we don't need to take. Which information we have to take as a segments into chart of accounts? Which information can be used? When you talk about company, yes, if you are going to record the transaction, the payables or receivables or general ledger or purchasing application or order management application, take any application. Definitely for every transaction belongs to which company you have to track. If you take department, in every transaction when you select company, okay, which department, the transactions belongs to which department we have to select. In any application, whatever the activity you do, that you have to capture with account. And wherever you are recording the transaction, if those transactions are related to so and so service type, you have to specify the service type. And what are the transactions you are recording in the different application, those transactions are belongs to so and so projects, that you have to give the name and the product, and that every transaction belongs to which location. If you want to track, you have to maintain all the details in the chart of accounts itself. But if you want to create the chart of accounts in the system, you have to create the chart of accounts with a minimum 2 segments to create the chart of accounts. Okay, to create the chart of account structure. Okay, to create chart of accounts structure. To create the chart of account structure in the system, minimum we have to use the 2 segments. Okay, the minimum are 2 segments. Minimum 2 segments are required. minimum 2 segments are required. What are those minimum 2 segments? The minimum 2 segments are, one is company, other one is account. This is very, very basic information when you record the transactions in the system. Okay, when you create any transaction, at least you have to specify the transaction belongs to which company and which account. Which account means which activity you are doing. You are doing the sale or purchase. If it is sale, what you are selling. If it is a purchase, what you are purchasing. If it is expense, which expense, that is admin expense or travel expense. This is all we have to address in each and every transaction. Okay, if you want to capture any transaction, minimum we have to maintain the 2 segments. Those 2 segments we have to maintain within the chart of account structure. With the help of accounting key flex field, we can create the chart of account structure. For that, we'll give the name. That is the reason we are calling a chart of account structure name. Within the chart of account structure, we'll give the segments. Under that segments, we'll maintain the segment values. Minimum how many segments we have to create? 2 segments. But Oracle is giving the flexibility to create maximum 30 segments. You can create max 30 segments within the chart of account structure. Okay. To create the chart of account structure, minimum 2 segments we have to create. And Oracle is allowing up to maximum 30 segments. But at the same time, Oracle is saying, don't use many segments in our chart of accounts. You'll have a performance issues in the system. When users are going to create the transactions in the payables, receivable, GL, purchasing, order management, inventory, and different applications, the same chart of account structure need to be used across all the applications to capture all the different segment related data. So that is the reason ideally Oracle recommends don't use many segments. You'll have a performance issues. Reality, when you do the implementation, ideally how many segments we suggest or we finalize for the clients based on their approvals and our suggestions. So general normal implementation, when you see, ideally we see 6 segments or 7 segments or 8 or 9. We generally never suggest any client to use more than 10 or more than 10. There may be some clients who are using 10 and more than 10 also, but those are the rare cases. Okay, as a very best practice, we'll try to minimize number of segments what they require. So the reason is why we have to minimize. Every application has a capability of capturing that application specific data. Commonly, which data need to be captured irrespective of application. That information only you have to take into chart of accounts. So normally we just create segment chart of accounts with the 6 or 7 or 8 or 9 segments. I'll take the one of the example. Say we are doing the implementation for one client. Their requirement is they want to capture company information. Company is one segment, and the department data they want to capture. Definitely account. Okay, and they are into some kind of they are do some activities as a project. So in that case, you can have a project as a segment. If client is going to use project accounting application, so if client is using project accounting application, means project costing and project billing, we have a separate applications from Oracle. So if they are using the project related application, the project segment is not required in the chart of accounts. If client is not using the project accounting application, there is no possibility to identify each and every project related transactions. The transaction belongs to which project. That is the reason the project segment we have to include in the chart of accounts. Okay, and they want to capture location also. Sometimes they can do the transactions within the company only. Ideally, we purchase from the supplier and we'll sell to the customers. Sometimes one company, say we have 10 companies within our organization, there could be some transactions between those companies. So in that case, one company is purchasing from which company is selling to other company. If you want to capture that information detail level, you can have another segment called as intercompany. So that within our organization only, the transactions are happening between which companies also you can capture. If you have such kind of requirement, you can have this kind of segment also. So this is how you can have a segment. When you sit with a client, Okay, we'll come to know. Okay, sometimes just say client is running the business, the company, they have two different companies, and they can have another segment called as LOB, line of business. There could be different business classifications. Okay, different vertical of businesses. If they are doing the different type of businesses, so they may have an entity, company may be one. The company may be one, or they may have two companies. Within that company, based on what activities they are doing, they can have a different vertical of businesses. For to capture that also, you can have LOB as a one of the segment, line of business. Okay, which business related transaction this is irrespective of company. Company anyway will select. The company may involve in the different businesses. So in that case, you can have a segment called as LOB, line of business. Nothing but vertical of businesses. If you want, you can have it. In the same way, if you want to perform the transactions within the organizations across the different companies, you can have a segment called as intra-company. So let's take this simple example. We have one client. They want to capture primarily these details. The company and account anyway mandatory. This company segment and account segment, these are mandatory when you do the implementation for any client. Ideally, they have to capture the transactions belongs to which company and which activity they are doing. Apart from that, what information they want to capture, those also we have to include as the segments within the chart of accounts. So along with the company and account, they want to capture the department, and they want to capture the project, and they want to capture the location also. Fine. Now, if you finalize these 5 segments, when they are using the business, when they are running the business, maybe after 1 or 2 or 5 years, they may go with a business expansion. In that case, they may get the requirement of one more segment. So as of now, they have one company and they are doing only one business, one type of business. But later they expanded business and they started new business, different new businesses under the same company. So in that case, if they want to capture some additional details after maybe 2 years or 5 years, since they don't have relevant segment, they cannot capture. That is the reason what we have to do is always we have to suggest to the client to maintain some buffer segments, additional segments. If you suggest the client to maintain few additional segments in the chart of accounts as a segments, in future if they get some additional requirement of capturing some other details, they can use that buffer segments by giving some name. So ideally we suggest the client to maintain some future segments along with the actual segments what client required. We have to suggest the client to maintain some additional segments also. In future, if they get the requirement of a new additional segment, they can use those segments. Finally, we suggest the clients to maintain additional segments like future 1 and future 2, or at least one future segment. These you can call as buffer segments or future segments. Now, once business will start creating the transaction, they will select company, department, account. If project is applicable, they'll select project. Otherwise, they don't select. The transaction belongs to which location, they'll select. And when you talk about future, we don't know what segments we require in the future. That is the reason there won't be any values will maintain for this future 1 and future 2. We'll suggest the client to maintain some 0 value, dummy value. Okay, maybe after 5 years, client came up with one requirement. They started new businesses also. So this future 1 you can convert into maybe LOB, line of business. Okay, when they are running the business, initially they are doing only one business. They have say 2 companies or 2 branches or 4 branches, but they are doing only one business. Okay, they started few more businesses. Now they want to capture each and every transaction for so and so company. When you are recording the transaction for that company, which business related transaction that is they want to capture, they need one more segment called as LOB. If you don't provide future segments in our chart of accounts now at the time of implementation, in the future we should not add. System will allow you to add, but that will create many data inconsistency issues. Everything will get disturbed. That is the reason strongly Oracle recommends don't add any additional segments in the future. If you think in future you may require additional segments, when you are creating the chart of accounts for first time, provide additional 1 or 2 future segments. In future, they can convert that future segments into the real segments, whatever they required. so that they'll be able to maintain the data and they can capture the transactions with those additional segments also. This is what Oracle is recommending. The same we have to follow. So when you do the implementation, what are the segments client is required? Along with those segments, we have to suggest one or two additional segments, which we call as future segments, or you can call as buffer segments. Since those are additional from whatever we require now, so those we can call as buffer segments also. So this is how we have to create the chart of accounts. So this chart of accounts where we have to create the accounting key flex field. Within the accounting key flex field we have in the general ledger application. Okay. So this is the basic point we have to understand before we go and create the chart of accounts. When you create the chart of accounts in the system, what are the steps we have to follow? And there are some other information also which is related to chart of accounts. Those points also will discuss detail level. Before we get into the system, this is the basic understanding we required so that it would be easy for us when you create these, the same in the system environment also. Any questions here, please? This simply we call as a part of implementation, we have to design the chart of accounts. Designing means identifying how many segments client required. Client will come up with these are the segments we required. We'll sit with the client and we'll discuss, okay, these segments you don't require. So and so application has a capability of capturing the supplier wise records. This also say order management has a capability of capturing customer based records, and you don't need to take item into chart of accounts because item related information can be tracked separately. So this is how we discuss with the client. Okay, as per current reporting requirements in the current system, whatever they are using, client will ask us, we have to tell them. So whatever we are discussing now, the same, just if you are going to work for implementation, you have to tell to the client. So to what information you want to capture as a description, that you can just capture with the concept called a chart of accounts. So what details you want to capture in each and every transaction, that we have to maintain within the chart of accounts as a segments. Whatever you maintain as a segments, based on that you can prepare any sort of reports. If you don't include certain information in the chart of accounts, so that you cannot track in terms of your reporting requirement. This is how we have to discuss with the client. Then client will come up with the saying that we want to capture so and so information also. That also will include. If some information is not required in the chart of accounts, which ideally can be handled by specific application, that will ignore in the chart of accounts. And we have to suggest to the client what is the importance of the future segments. We have to tell them in future, if you require, you have we can just give you the option with the future segment. You can use it even if you don't require in the future also. That will remain in the chart of accounts only. That won't create any issues. So this is how we have to suggest to the clients. Otherwise, if you don't suggest the future segments, in future when they need new segment, that will become big task for them. Again, that has to be they have to redesign the chart of accounts. That will become small size of project also for a client, which will cost for the client. So as a best practice, always we have to suggest to the client to maintain the additional segments in the chart of accounts as a future segments. So this is what we have to understand when you talk about chart of accounts. With the help of chart of accounts only, you can capture the description of each and every transaction. Any questions here, please?
Hey, Lakshman. So while defining this chart of account, you said that project segment we can suggest to the client only when they are not using the project accounting. Is that correct?
When they are not using the project accounting, and if they are dealing with the projects. Okay.
Okay.
Project specific activities. Take example L&T. Okay. So when you take L&T company, they'll run their application. Whatever they are purchasing, they'll record. Whatever they're selling, they'll record. Whatever the assets they have, they maintain. The purchases they do, the sales they do, all they maintain different applications. So if they are using the Oracle Fusion applications. Okay. And when L&T is doing some projects, okay, say they are doing the metro project. In that case, they have to capture. If they are purchasing some material only for the project, metro project, in the transaction they have to include the material what they are purchasing, they have to include the project information also, right? The expense what the material what they are purchasing belongs to which project, they have to include. If they are not doing any projects for their customers or internally, if they are just doing the business without any project related oriented activities, they don't need segment called as project. Okay, so that's whatever they are spending, whatever they are billing to their customers, if that is related to project specific, then project segment is required. When reality they are doing activities with the project based, they use the application called as project costing and project billing. The project costing and project billing applications only we call as project accounting, because in the costing and billing only accounting takes place. That is the reason those we call as project accounting applications. So if they are doing project specific activities, they use project accounting application. If they are doing project specific activities and if they are not using the project accounting application, we use the segment called as project in the chart of accounts. In which scenarios they don't use project accounting applications, even they are doing the projects. Very rare cases, if they are doing project activities, they no need to implement project accounting application. Since it's a very rare cases only they are doing some project specific transactions. So in that case, that you can include in the chart of accounts. If any transactions related to so and so project, you can track so that you can generate the reports. This is a point we have to understand. Any questions, please?
Okay. And regarding the account segment, is it related to some revenue, suspense, and encumbrance account?
All accounts. Okay. All revenue.
Okay.
Okay. All revenue accounts, all expense account, all asset accounts. Okay. All liability accounts. All the information we have to maintain in the account segment. So when you are recording the transaction, accordingly the transaction amount should hit to which account you have to select it.
Okay, so how many type of distinct accounts segments that we can have, or account type we can have?
When you are working on the system. Okay. But
okay, yeah.
Answer, let me talk about it. We can classify the accounts into 5 types: expense, revenue, assets, liability, ownership or equity. Okay, the net income and all falls under owner's equity, ownership or owner's equity, ownership equity account type classification. So this is how the accounts are classified: expense, revenue, asset and liability, and ownership. Okay. With expense, you can have a number of expense accounts, a number of revenue accounts, a number of asset accounts. This all we have to maintain in the system with the help of chart of accounts under account segment. Any questions, please?
Hi, Lakshman. One question is that, even all those segments that we have, so sometimes we need to ensure that the segment values follow a certain combination. Like, some accounts can only be valid for finance. Some accounts can only be valid for HR, and so on. So how do we ensure that, we enforce a combination of certain values?
I got your question. Yeah. Ideally, we maintain all the companies, all the departments, all accounts and all. If you have a such kind of requirement, say you have a company called as 10. For company 10, department 5 is, you never record the transactions with the department 5. Okay, there is no department 5 with the, or else say you have a department called as R&D. So company 5 never deal with R&D department. In that case, you can set in the system rule saying that with a company 5, so and so department is invalid. You can set the rule in the system so that system won't allow any business user to record the transaction with the company 5 with the R&D department. Or else you can set account level also. If you use the company 1, which department is invalid, which accounts are invalid, with which company, which projects are invalid, that all you can set. We have options. Okay, when you are working on general ledger application, we'll go through all those features. I included everything in the course curriculum. We are going to cover each and everything, what we should understand, how the product functionality we have. That we can achieve. Okay, we have a rule called as cross-validation rules. Just for information, I'm giving the name. By using the cross-validation rules, with which company, which department is involved, or with which company and department, which account is invalid, or with which company, department, which project is invalid, or else with which company and department, which location is invalid, all the rules you can set so that system won't allow the business users to select that combination to create the transactions. Yep. Any other
Okay.
questions? Yeah. Thanks. This is a very, very important point. Your entire implementation is going to be successful or it will fail. It totally depends on your chart of accounts design only. Chart of account design is very, very important. So simply as we are discussing, we don't finalize it. We'll sit with the client and we'll discuss. Client will ask, I need so and so segments. We'll suggest them whether those are required or not. And we have to suggest and they will ask finally, it need to be finalized. That is the one which we will use for the client to record the business transactions. Okay.
Next one.
Please.
Yeah, we are having segments, right? The segments is the company, department, and account, and project and location. These are the segments.
Correct.
And values are, we are giving the APC, finance, HR, something like that.
Correct.
So segments and values are, those are the values of the segments. The
Correct.
chart of accounts is the combination of the segments.
Yeah, complete information.
What is this key flexibility and the general ledger?
Sets the complete information we call a chart of accounts. This complete information we call a chart.
So what is this key flexifield and what is the GL, general ledger?
Now, how you are creating this? You are creating the chart of account structure. Under chart of account structure, you have to create the segments. Under segments, you have to create the segment values. Since this is spreadsheet, I am able to enter under chart of account segments, under segments, segment values, right? Because this Excel provides the option to enter the values wherever you want to enter. Since we have a cells, these are very much flexible. These fields are very much flexible here. In the same way, this accounting key flex field will allow us to create these in the system by following this hierarchy. That is one of the setup to create first chart of account structure, in chart of account structure segments, in segment values. Okay, you can notice the hierarchy. First, we'll create the chart of account structure. Under chart of account structure, we'll have segments. Under segments only, we'll have a segment value. To maintain this kind of hierarchy in the system, we have to use the feature called as accounting key flex field. By using accounting key flex field only, this we can create in the system. Okay.
So it means that accounting key flex field is the combination of chart of accounts again.
Combination, not by using the accounting key flex field, you can create one or multiple chart of account structures. Okay.
What about the GL?
GL is general ledger application. That is one of the application. In the last session we discussed, right? P2P and O2C cycle. There we discussed. General ledger is one of the application where we prepare the financial reports. General ledger, that is one of the application name. Have you attended yesterday's session?
Yeah.
There we discussed, right?
Yeah.
Hope you remember. We discussed that. That is the reason. See, before we talk about general ledger and all, you should aware of what are the applications we are going to deal, which are involved in the P2P and O2C. I just given the introduction with the P2P and O2C cycle. GL means general ledger. That is one of the application. So which collects the data from all the applications to prepare the financial reports. Apart from that, we can do many other activities also in the GL. In our classes, we'll see all those. Any other questions here, please?
No,
please.
Yeah, is there any strategy to finalize the chart of accounts design?
Okay. So the strategy is the first point is minimum 2 segments. That is a rule. Okay, minimum 2 segments. Ideally, those would be company and account. And remaining all the segments completely based on the client requirement only. Okay, what base we have to create the chart of accounts as per their reporting requirement. When they do the reporting, which information they want to report in terms of reporting, on what base they prepare the reports. Primarily, they have to report based on the company. Apart from that, what are the other elements based they want to give the reporting, accordingly how to create. The simple point is based on their reporting requirements, we have to create the chart of account structure. And when you create the chart of account structure, the condition is minimum 2 segments are required. Ideally, those minimum 2 are company and account. You can name it as company or you can give some other name also. When we create in the system, I'll talk about that also.
Fine. And is it only the financial consultant's responsibility or other application
Only
consultants
finance
also
consultant
involved
has to
in?
take the responsibility of designing and finalizing the chart of accounts with the help of client. Okay, it's not, see, when you talk about other setups, etc., we can sit alone and we can do it. But when it comes to chart of accounts, we have to discuss with the client and we have to finalize. They have to accept what we are suggesting, or else they have to tell us what they need.
Thank you.
Yeah, thanks. Any other questions? Okay.
Lakshman, you talked about this 5 type of accounts.
Yeah.
So apart from that, there are suspense account and accrual accounts as well. So in which category they fall?
See, those all falls under the types only. They take example, salaries account. Salaries account falls under expense. Okay, you have accounts payable account. Accounts payable accounts falls under liability. You have account receivable account that falls under asset, right? So this is how, like, we'll see in the system. We have all the accounts. How in the system also you have to go and set which account. If you see, client will provide all the accounts with account types also, because they may give an account name as ABC. We cannot understand by seeing the name as ABC, right? So they will provide the account types also. What are the accounts they are using in their business, and what is the nature they are maintaining for that account? What is the nature of account? Nature is expense or revenue, asset, liability, everything they will provide. What are the information they'll provide, that only we have to maintain in the system. So when you are working in the classes, I'll take you through all the accounts. What are the accounts we have? In fact, we can enter or we can load all the accounts which are required to work on all these finance applications and do P2P or 2 cycles. Okay, we'll see how we can manage that account information, and it's a mandatory we have to set which account is which type. Otherwise, we cannot use that account.
Okay, thank you.
Yeah, we'll see that. Thanks. Any other questions, please? Any other questions? No questions.
Yeah, Lakshman, it's regarding allocations. You are also covering allocations, correct?
Yeah, we'll cover allocations.
Hi, Lakshman.
Please.
Yeah. So are these chart of accounts specific for a company, like an organization, or it is specific to a ledger? Yeah. Basically, my question is, can there be multiple ledgers with different?
1 second. I'm going to that point now. Okay, I'm going to that point. Okay. Because you and me are going to use the term called as ledger. It's new for many people, right? So we'll discuss now. Now, what points we discussed? If you want to record the transaction, we need calendar. Okay, we need currency specification. When you enter the transaction, every transaction we have to address with the currency. And to capture the description of the transaction, we need chart of accounts. Okay, so with the help of calendar, you can capture the date. With the help of currency, the amounts what you are entering, you can specify the amounts are in which currency. With the chart of accounts, you can capture the transaction. Now, these three are starting with the C. If you notice, calendar is starting with the C, and currency is starting with the C, chart of accounts starting with the C. In short, you can say the COA. Chart of accounts. So now these three are starting with the C. This we call as 3 C's. This we call as 3 C's. If you want to record the transactions in the general ledger application, we need these 3 C's. The general ledger application also you can record the transaction. 99% we don't record the transaction in the general ledger. If you purchase something, you'll record in the purchasing application. If you want to create invoice, we'll create in the payables. If you want to make the payment, you'll make the payment in the payables application. So 99% transactions need to be created in the respective applications. The payables, receivables, fixed assets, purchasing, order management, these are the applications where we record the real business transactions. But if you want to enter some adjustment entries or any sort of transaction, the general ledger application also, yes, you can do that. Okay. By using these 3 C's, you can create the transactions in the GL application. Okay, the GL application. You can create the transactions by using these 3 C's. If you keep these 3 C's ready, system won't allow you to create the transaction in the GL. If you want to create the transactions in the GL, we need calendar, currency, chart of accounts. With the help of these 3 C's, we can create the transaction in the GL. But just these 3 C's are ready, you cannot create the transaction in the GL. What we have to do is, these 3 C's you have to group into concept called as primary ledger. Against these 3 C's, by grouping these 3 C's, you have to create the primary ledger. You have to create the primary ledger. If you create the primary ledger by using these 3 C's, by using the primary ledger, you can create the transactions in the GL. How you create the transaction, you'll enter which account should be debited. Say for example, in the GL you can record the transaction so and so. Say for example, admin expense account is debit. Along with that, you specify which company, which department, if applicable, which project, location, and all will specify. Account will be giving as a, say for example, expense account, or else you'll say company 1. Okay. Department, finance department, account is admin expense. In the same way, project, location, LOB, all you will specify, you will enter the debit line. The same way, you have to enter the credit line. The company 1, finance department, account is cash account. It's a credit. You can enter like this. $100, $100. In the GL, by using these 3 C's, this is how simply you can create the transaction. Okay. For which company, that is expense, and which department, etc. All the segments you can include which are applicable, and you can create the debit and credit lines. This is how you can enter. So the GL, always we have to create the debit and credit lines through manual process only. For which company, that is expense, and whether we are paying, then you can take the cash account. If you are not going to pay, you may take as a liability, as it's a pending for payment. So this is how manually you have to enter. But if you want to record the transactions, in subledger applications, already discussed. Other than GL, all applications we call as subledger applications. Okay. Other than GL, what are the other applications? Payables, receivables, purchasing, inventory, order management, fixed assets, cash management. All applications we call as subledger applications. If you want to create the transactions in the GL, general ledger application, these 3 C's are enough. Can we use the 3 C's directly to create the transaction in the GL? No. By grouping this primary ledger, by grouping these 3 C's, we have to create the primary ledger. With the help of primary ledger, we can create the transactions in the GL if you have a 3 C's within the primary ledger. And if you want to record the transactions in the subledger applications, subledger applications means inventory, purchasing application, PO means purchasing application, and AP, AR, CM, FA. We discussed, hope everybody aware of these terms. Okay. INV, inventory application, PO, purchasing application, AP, accounts payables, AR, account receivables, CM, cash management, FA, fixed assets, and OM. There are many other subledger applications. Since those are not required for us, when we are working on the financials, along with the financials, we should understand the basics of SCM. That is the reason I included SCM applications related introduction also. So these are the subledger applications. There are many. If you are going to create any transactions in these subledger applications, these 3 C's are not enough. Okay. Along with these three C's, if you want to record the transactions in subledger applications, okay, along with these three C's, we need one more component called as accounting method. So where is the C? As you can verify the documentation, Oracle says you consider this as a fourth C. The accounting method you can call as convention also, accounting convention, but they are not taking C from the conventions. Convention starts with the C. They are not taking that C representation from the conventions. So we have accounting method. The calendar is starting with the C, currency is starting with the C, chart of accounts starting C, but accounting method is starting with A. Ignore A, count C, which is second letter, and now this you can call as 4 C's. If you want to record the transactions in subledger applications, along with these 3 C's, we need 4th C also. We know about 3 C's. Calendar to capture the date, currency to identify the amounts, chart of accounts to address the description of each and every transaction. But what is the use of accounting method? Say for example, in accounts payables, I'll go and create one purchase invoice. When I create the purchase invoice, automatically system has to create which account is debit and which account is credit. Okay, which account should be debited, which account code combination need to be debited, and which account code combination need to be credited. It should create automatically. When you create the invoice, system has to create accounting entry, which account should get debited for invoice, which account should get credited, from where that accounts need to be taken. When you make the payment, for payment, which is the accounting entry, how that system should create, that should happen automatically. In case of GL, you have to enter. If you create any transaction, which account should be debited, which account should be credited, we have to enter. But in the subledger applications, everything is automated. So Oracle is providing all the rules. When you create invoice, which accounting system should create? When you create the payment, which accounting system should create? When you create the sales invoice and the receivables, which accounting entry system should create as a debit and credit? When you create the receipt in the receivables, which accounting entry system should create? When you create asset in the fixed assets, which account should get debited and credited? When you perform the depreciation in the fixed asset, which accounting entry should take place? When you just create the receipt in the inventory or from purchasing side, which accounting entry system should debit and credit? All system is providing the predefined rules. Okay, Oracle is providing the predefined rules. So we don't need to set anything. All the rules are part of accounting method. This you can call as subledger accounting method also. For accounting method, other name is subledger accounting method. In subledger applications, to create the accounting, there are certain rules inside of this. That is the reason this we call as subledger accounting method. In subledger accounting method, we have a set of rules to create the accounting entries for subledger application related transactions. Okay, so this we no need to create. Oracle provides. If at all anything required, you can modify as per your requirement, but ideally you don't need to create it. So for all the applications, what are the subledger applications Oracle is providing the clients? In all the application, how accounting should take place, they written predefined rules. As per the rules, accounting should take place. If you are going to record the transactions in any one of these applications, we need 4 C's. That means when you create the primary ledger, we have to include this primary ledger. Primary ledger. When you create the primary ledger, if you create the primary ledger only with the 3 C's, that primary ledger can be used to record the transactions only in the GL. If you create the primary ledger with the 4 C's, that primary ledger can be used in all the subledger application. Since the primary ledger has a 4 C's, even the same primary ledger can be used in the GL. To create the transaction in the GL, these 3 C's only required. Already 4 are there. So if you create the primary ledger with the 4 C's, that can be used in the GL as well as subledger application. If you create the primary ledger with the 3 C's, we can use only in the general ledger application. If any client is going to implement only general ledger application, you may create the primary ledger with the 3 C's. In all the scenarios, ideally every client will go with the many applications, not only with the just GL. In those cases, you have to create the primary ledger with courses, those are calendar, currency, chart of accounts, and accounting method, then user will be able to create the transaction and accounting would takes place automatically. We no need to go to select and specify this account should be debited, so and so account need to be credited. No, they are providing the rules accordingly. Automatically, system would take the accounting. So this is what we have to understand. Now, chart of accounts we are discussing. Once you create the chart of account, the chart of account you can use in one ledger or multiple ledgers. Ideally, what we do is for every country we create the separate chart primary ledger. For every company, every country, say you are going to do the implementation for India, you have a client who are operating the business in say 3 countries: India, USA, and UAE. These 3 countries they are doing the business. So when they are doing the business in 3 countries, as per each country financial year, we have to maintain the calendar. Okay, the calendars we have maintained separately. For every country, currencies would be different. And if you do the implementation for many countries, ideally we use the same chart of accounts. If you are going to use a one chart of account for multiple countries, ideally that we call as global chart of accounts. Say for example, as for India operations, these are the chart of accounts we require. These are the segments required. But USA need totally different segments along with the company and account. They need many other different segments. In that case, definitely you have to go with the different chart of account for USA. So UAE required chart of account same as India chart of accounts. Then you can use one chart of account for India and UAE. For USA required, USA business operations required completely different segments in the chart of account. That is the reason you may go with different chart of accounts. But reality, when you see the real-time implementations, we use single chart of account for multiple countries, which we call as global chart of account. Okay, so this is the approach we follow. One chart of account can be used for multiple primary ledgers, and once for each primary ledger you can go with a separate chart of accounts also, that completely you are based on your business requirement. But general practice as reality, you could say if you do the implementation in multiple countries, 99% same chart of account will use for all the countries. That's how many things will get simplified if you use the global chart of accounts. One chart of account if you are going to use for multiple countries, that we call as global chart of accounts. If you use one chart of account in one country, that you can understand that as a local chart of accounts, but we don't use the term as a local chart of accounts. Okay, these are the points we have to understand. Any questions from anyone, please? Any questions here, please?
Hey, Lakshman, I have a question.
If you have
Hi, I have a question
ask
on
question
the.
directly. One second. Don't mind.
Yeah. So can you take a real world example? Let's say Amazon or some company, and explain the chart of accounts what you mentioned, because I have a confusion on department and line of business, and maybe company also. So what exactly, like let's say a company like Amazon, which has presence in US, like many places or something like that.
Okay, fine. Instead of taking Amazon, I'll take Google. Okay, I'll take Google. So in that case, Google is the company. Say I'll take company name as Google India Private Limited. This is the company name. The different line of businesses are Google search, okay, Google Cloud, Google Ads. Okay, so these you can take different line of businesses. Okay, when they are registered as a company, the companies of the memorandum, they'll specify with this registration what are the different businesses they are doing, that they can specify. They can generate the revenue from these different services which they are offering to the clients. Okay, so these we call as different LOB, line of businesses. Okay, so this is how you can take. Departments means it's all about the finance department, HR department, sales department, marketing department. Okay, these are the departments. If you have any question, please.
So is it generally, is it always like one company and many line of business? Because in your
It
earlier
totally depends. One second. Yeah, I got
example, when you were
it. Totally
explaining
depends. It totally depends. Say, for example, they don't want to have a company. These line of businesses they can take as a separate companies also. That is possible. How they want to manage, they can do it. In that case, you can ignore the line of business. Okay. Each business what they do,
Okay.
they can treat as a company. Reality company may be same, but you have a requirement of recording the transaction for Google search services, the expense what you spend, the revenue what you generate, you want to search separately Google Cloud. So you want to just spend whatever you are spending, whatever you are generating as revenue, you want to track separately through Google Ads services, whatever you are spending, whatever you are gaining, those you want to track separately. In that case, those you can take as a companies. What is the primary level? What is the primary level? You want to balance each and every transaction that you can take as a company. Okay. Otherwise, you can take that those as a LOBs and the registration of company you can take as a company. If you have only one company, yes, you can take that level. You can generate the reports, and additionally, you will be able to track the information. These levels also you can filter. And here I'll tell you one point. Along with this, we have a concept called as enterprise structure. How the solution can be decided, we will discuss there. There you can notice these points, how these can be mapped. Okay. Still, if you have any question on this point, you can write, but just I'm giving the note. The next session, we are going to discuss about enterprise structure. When you are going to do the implementation for any client, how we have to design the solution. Now we are talking about just chart of accounts only. Just chart of accounts. But how we'll be designing how we'll finalize the entire client solution, we are going to discuss in the tomorrow session that we call as enterprise structure. So there you can understand many points, what you have to take as a what into system, what you have to take as a companies, what you have to take as a LOBs, line of businesses, what else you have to take as something else into the system. When you compare these all points, we will discuss in the next session. But that let it be. Anyway, we'll discuss. But as of now, if you have any questions, no issues, you can go ahead.
Yeah, last question. Is entity synonymous to company?
Entity can be company. Okay. So entity you can treat as a company, or entities you can keep as an entity separately, and companies can be different. So here,
so in this example, what could be the entity if we were to design like a segment for entity also?
So can you repeat your point?
So in this example, like for the Google example, if we were to have an entity segment also, what could be the entity segment values?
Company you can make as entity, or
okay.
Company you can keep as a company and you can have entity. I'll give you the example.
Sure.
Yeah. So take example, Reliance. Okay. Reliance Trends, Reliance Digital, Reliance Supermarket. The Reliance registered these three as three separate entities. Okay. If they go with for these three separate registration, these three you can create as three entities. These three entities. So now if we are going to implement in our chart of accounts, you can take these three as a companies. Okay, you can take these three as a companies. That is the one case. You want to track the business transactions. Okay, what Reliance Trends Digital Supermarket is doing. Reliance Fresh, right? Supermarket means Reliance Fresh. Okay, what they are doing, just you can take as 3 companies. The Reliance Trends has 2 branches. Reliance Digital has 3 branches. Reliance Fresh got 5 branches. In that case, instead of taking companies as entities, we'll take these branches as a companies. These will take as entities. Your company means we'll take these 2 branches, 3 branches, and 5 branches. Say Reliance has a companies like Reliance Trends. One branch you have in Hyderabad. Other one you can take Reliance Trends Bangalore. In the same way, Reliance Digital 3 locations and Reliance Fresh 5 locations. So how many branches you have? Those you can take as a company. Okay, you can take like that, or else the Reliance has only one registration as a Reliance India Private Limited. In that case, Reliance you treat as entity. Okay, you treat as an entity as Reliance. So within that, you can have each branch as a company, and when you talk about LOBs, these 3 you take as LOBs. Entity is only one, that is Reliance. Now, very basic point is what level you want to control the transaction that you will take as a primary one. Your requirement is you want to prepare the detailed reports at what level? Entity level you want to prepare detailed reports, or branch level you want to prepare the detailed reports, or LOB level you want to prepare the basic reports. That level you take it as a primary. The remaining, if you want to include, you can include, otherwise you can ignore. Okay, ideally we create companies based on the branches. If you take this example, we'll take the company and we'll create this 10 branches. This all falls under one entity only. Or else if these are 3 separate registration, 3 entities we call. Along with these companies, if you want to capture the information entity wise, you want to do the reporting 2 levels. Entity level you want to do the reporting, and branch level. This we can call as a company or branch. As per system, simply we'll create as a company only, even that is a branch. So entities will have a 3, and branches for each entity we are going to have 2, 3, 5. This is how we'll create 10 companies. And if you want to produce the reporting 2 levels, yes, you can do that. Entity level separate reporting you can capture, you can generate the report separately. Company level, here company means branches. Branch level also you can do, if this is a separate registration. Or else it is not separate registration, single registration. In that case, entity will become only one, that is Reliance. These 3 you can take. Okay, business wise also you want to capture the transaction, you can take those 3 as a balances, this LOB, line of business. For each line of business, how many branches you have, those you can take as a companies. Those are nothing but branches. Here entity would be only one, Reliance. Okay, based on how they have business, how they want to report, they can do all these activities. So they have a company, they don't want to capture the transaction at entity level, they don't want to capture LOB level, they want to capture transactions company level. They have 10 branches, will create 10 branches as a 10 companies, will record the transaction. Every branch refers, every company refers so entity related transactions. Now these entities will be mapping with the company with the concept called as a legal entity. Again, we have to get into some other terms which you can understand only with the enterprise definition discussion only. Again, if I introduce legal entities, etc., those, it's a different concept. Those we'll discuss in the enterprise related session so that you can understand. That would be in the next as a next session only. Okay, fine. That I'll discuss. I'll make you just comfort with these information maybe after completing the enterprise. In the enterprise session itself, I'll just give you the option what you can take as what you cannot take as a what, in which scenario, what you can take as an entity, as a segments, or a company as segment, LOB as segment, why we have to take, why you should not take so and so into chart of accounts. We'll discuss those points also along with the enterprise structure finalization in the tomorrow session, next session. Okay.
Yeah, thank you very much.
Okay.
Thanks.
Okay, in just one question here. In R12, we have, when we do the subledger accounting method, we have this application accounting definition, all the SLA rules are set up. So in cloud also, is it the same way we set up the SLA rules?
Yes.
Or is it different?
Yes. How we have in EBS, SLA we have as it is in the Fusion also, but within the SLA, what
Okay.
components we have, some naming convention they changed. We will discuss in our classes.
Okay, so even in SaaS, that's possible, right? Okay.
Everywhere, SaaS,
Like
that is a basic thing.
Yes.
That
Okay.
how accounting need to be derived.
Okay.
There could be a requirement from the client. Yes, that we can modify if required, even SaaS also.
Okay, thank you.
Yeah, thanks. As is we have, but naming convention they changed for certain components. How they changed, how it is relevant or slightly different. Those points we'll discuss as a part of payables. As a part of payables, I'll take you through the subledger accounting method also. Fine. Any other questions from anyone, please?
Yeah, actually, you mentioned that for any you need to record any transaction directly in GL. So we need to, along with the 3 C's, we need to mention the primary ledger.
No.
Right?
One second. It's not mentioning these 3 C's. We have to group into primary ledger. With primary ledger, you can create the transactions. We don't need to mention these. We will take into primary ledger. By using these 3, we create the primary ledger. When you are creating the primary ledger, we select which calendar, which currency, which chart of accounts. Now, if you are going to create the transaction in the primary GL, by using the primary ledger, we create the transaction. By using the primary ledger means by using these 3 C's. That's all.
So we don't have any direct value for PL, right? It's a combination of these 3 C values only we need to mention in the GL.
Exactly.
Right?
Yes, you are right.
Okay, then.
Yeah. So along with these information based on the application specific details also you can capture. Say for example, by using this primary ledger, if I am going to create the invoice in the payables application, I'll use the calendar, I'll use the currency, chart of accounts I'll use, and accounting method also will come into the picture to create the accounting entries. Since I am creating the invoice in the payables, I need supplier also, but supplier you don't need to include in your primary ledger. That is available from the payables application. The same way, based on the application, when you are recording the transactions with the help of primary ledger, the application specific data will be able to capture into transactions. Okay. So this is what we have to notice. Any questions, please? We try to understand this chart of accounts and primary ledger as standalone. When it comes to overall solution in the next session, it would be very much clear for us. So we'll discuss about enterprise, how those need to be taken into chart of accounts, what we can map with what. So all the possibilities, what we generally don't do, all we'll discuss. So any questions, please? If no questions, we can wind up for today.
Yeah, Lakshman, one question. So we talked about entity and company.
Don't talk about it.
So
One second. Ignore it. We'll discuss the next session, because now we have to discuss many points that we planned for next session.
Okay. All right.
Okay. Just here, company means take as a company. It could be entity or something else. Just as a company. Say one organization has 10 companies. I take in the 10 companies. Exactly what you can take as a company is what are the different options we have to discuss. It is not a straight away point. So it completely depends on how the client wants to take what as a company. Those points we have to discuss. That we'll discuss in the next session. Okay.
Sure. Okay.
Ignore that mapping. Rest any questions, please. That anyway we are going to cover. Since we are not touch that point, so better we can discuss in the relevant session only. Next session we are going to, everything would be clear for us. Entity, this and that, etc. mapping, all those points. Any other questions, please? Fine. Okay. So if no questions, then that's all for today. We'll connect in the next session. So our classes are Monday to Friday. We'll connect on Monday, same time, as per India calendar. Okay, thank you all. Have a good day and good night. See you on Monday.